got to... No.
More recently, I've also been in charge of the Fast Infra initiative financed to accelerate sustainable transition. One of the potential tools may be to address some of the issues we just touched upon a minute ago, and that we'll now cover and try and address again during this panel on private sector financing of infrastructure in emerging markets. So this theme has been a recurrent theme of, I believe, all previous editions of the Infra Week inaugural day. Unfortunately, the challenges are probably as daunting today as they were 5, 6, or 7 years ago. Many of you probably think that the progress has been limited. We'll try and discuss this and see potential avenues for optimism within this overall sobering landscape. One tiny progress, I must say already, is that this theme used to be treated at the very end of the inaugural day of the Infra Week in previous editions. We've now sort of scaled up to early afternoon. Maybe someday we'll be treated to a morning session, which would somehow recognize the strategic importance of this theme. So to address this issue, we have the privilege of having a diversified and prestigious array of speakers representing the various backgrounds or standpoints, public, private, and so on, to the financing of emerging infrastructure. Maybe we'll start by a quick introduction by each speaker, so 1 minute each, to briefly tell the audience who you are and what you do. So maybe over to you, Marisa. Maybe someone from the logistics to help?
Let me try.
Okay. So
You have to switch it off there to be able to...
okay.
Yes, you do. No? If anybody else has it on?
That work? Okay, we can share. Great. So apologies for the technical difficulties. Well, first of all, thank you very much for having me. Very, very delighted to be here. My name is Marisa, and I'm the Chief Sustainability Officer for Standard Chartered Bank. So my remit is both to look after what we do from a sustainability standpoint for the organization, which encompasses our public commitment to net zero through scopes 1, 2, and 3 by 2050, as well as our ambitions and everything that we do for and on behalf of the organization. But in addition to that, I also look after our sustainable finance practice. So anything that we do in the bank that helps our clients along their sustainability transition journeys from a financing or advisory point of view also falls within my world.
Good afternoon. Tom CEUSTERS. I'm a Director of Treasury at IFC World Bank. I'm in charge of all the funding and the liquid asset portfolio, and since a short time also of the capital markets advisory and educational programs. Treasury is part of a larger group at IFC, so it's officially Treasury and Mobilization, and I'll come back to that. The mobilization stands for the mobilization towards the private sector. Thank you.
Good morning, everyone. Marie-Laure, I'm the CEO of STOA, an impact fund that has been set up 6 years ago by the AFD and CDC. We are closing our first vintage, 600 million euro in equity that has been developed over Africa and Latin America mainly, so more than 50% in Africa. This year we've closed 5 deals. We will have closed 5 deals only in Africa, meaning that there is still, appetite and targets that we can follow. We are also a co-benefice climate fund with now an ambition put to 75% of our investment being co-benefice climate, and happy to discuss further.
Françoise?
Merci. Thank you, and good afternoon to everybody. So I'm Françoise Lombard, CEO of Proparco. Proparco is the subsidiary of the French Development Agency. Yes, but after the subsidiary of the French Development Agency that is dedicated to financing and supporting the private sector in emerging and developing countries in Africa, Latin America, Asia, in the Middle East. So financing infrastructure is, of course, key in our mandate in line with the Paris Agreement, but we also support financial institutions, corporate, etc., through both debt and equity, and also we are also providing guarantee schemes in technical assistance. Thank you. Merci.
Yes, my name is Lionel ZINSOU. I'm the co-founder of an advisory boutique called Southbridge, which is Pan-African, say. And we have also a little department principal investment arm. And in this context, we work for third parties to try and define some new models for Africa in terms of financing. One of the projects includes infrastructure, but is dedicated essentially to agro and forestry. And it is a coalition of philanthropic money to de-risk the investments and the debt fund, plus concessional funds of development banks and bilateral agencies, and private sector. Our obsession is how can we bring in private capital in the development of a sustainable economy in Africa.
Good afternoon, I'm Boris MARTOR. I'm a partner with Bird & Bird, focusing on energy infrastructure for the last 25 years in Europe and Africa, and I authored a couple of books on PPPs and project finance.
Okay, so indeed a very diversified array, ranging multilaterals, bilaterals, public investor, private investor, lawyers. That should enable us to hopefully cover the main issues at stake. We are in 2023, halfway through the Sustainable Development Goal deadlines of 2030, which also happened to be the deadline for the Paris Accord, and probably not really on the appropriate trajectory. But the idea for this panel is really to focus on the very latest developments, those that have occurred during the last 1 to 2 years. There has been a cocktail of crisis, as all of you are well aware. This has probably particularly impacted emerging markets and infrastructure financing, and would like to hear from our panelists how, from their standpoint, from the viewpoint of the structure they're in charge of, how this has effectively affected their operations, their planning, their ambitions for scaling up private investment in infrastructure, and as much as possible illustrated through example. So let's get started maybe with the macro financial and macroeconomic view, the helicopter view, and nobody's better placed than you, Tom, from the IFC, to tell us about the latest developments.
Yeah, thanks, François. I think you all know what happened the last 2 years, the pandemic, wars. We had, from a macroeconomic and flow perspective, we had massive fiscal and monetary policies and development of programs and whatnot. I would say to deal with the immediate needs that arose over the last 2 or 3 years. Now, we are actually in the unwinding of that and unwinding of the monetary policy for sure, and I would say the hangover of the fiscal policy. You have public debt levels that are at unseen levels, especially in the emerging market countries, And then, as you know, quantitative tightening is starting. The dollar has been rising. Inflation has coming through. So all of that has a tremendous impact on various operations. In particular, our shareholders, and this is as a community of the MDBs, obviously most of the shareholders are overlapping between the World Bank, Asian Development Bank, Inter-American Development Bank, EBRD and all that. So the needs, as François mentioned, the goals to get to 2030, the last 2 years were a clear setback. Poverty levels were decreasing, but now the pandemic put a serious dent into that. So the governments have been, the investment needs are as high as they have ever been, while governments are handicapped with the high levels of debt, both in developing and developed world. So with regards to the World Bank and the other MDBs, the annual meetings are going on in Marrakesh, and the demand is really twofold. One is a bigger and better bank, so there is a search to increase the capacity of the MDBs. I would say more by financial engineering, hybrid capital, and so on. The United States promised $3 billion, for example, but not massive capital injections, what you would expect. As I said, debt levels are high, even in developed countries. So that's one. A better bank is a more efficient bank, more cooperation, getting more out of it than what was the case over the last 10, 15 years. And then the second, and Lionel referenced that, is a focus on private capital facilitation, is both parts, is enabling private capital, and then the mobilization of private capital. And to go into that, I think there are like 3 challenges. The regulatory framework in a lot of countries is uncertain, so there's going to be a lot of work to be done on making regulatory changes, policy frameworks that need to enable private capital investments. I think also on the early stage, there's still a lot of work to be done, so harmonization of frameworks, feasibility studies, and whatnot. And then the third one, a lot of the countries, countries are not that big, so there's a problem of scale. So grouping of investment is something that we were looking at. But those are the big pillars in reaction to the macroeconomic picture of less monetary stimulus and lack of fiscal ability to do something. Thank you.
Thank you, Tom. I'm now turning after the multilateral view to a more bilateral view from you, Françoise, and maybe in complement to what Tom just said, if you could maybe differentiate a little bit between various categories of countries, low income versus emerging markets, for example. How's the view from your side?
Thank you. Yes, maybe it's not useless to remind that development finance institutions targeting private sector in emerging countries are operating both in emerging countries and low-income countries, and it is not exactly the same stories. And I don't think that the FIs have to play the same role depending on the country. In low-income countries, I would say that financing infrastructure is unfortunately more or less a matter of the FIs. Whereas in emerging countries, there is more space for collaborating between the FIs and the private sectors. Markets are more mature. We have more experienced and sophisticated players. Liquidity is usually higher, and the need for hard currency financing is usually lower. So It is not exactly the same story, and so development finance institutions like Proparco will be typically focusing in emerging countries on providing on several things. For instance, providing bridges on large scale, large transactions, like large infrastructure projects. They will be focusing on financing riskier models, new business models, sometimes new technologies. They also will be, they will focus also to some extent refinance some assets if there is, of course, value addition to do that. And I think we have to be, of course, innovative to find solutions to provide long tenors that, and more broadly, I mean, instruments that are not easily available in the markets in those countries. So, for instance, at Proparco, we have developed an instrument, an innovative guarantee scheme that is called Unlock, targeting financial institutions that are willing to finance infrastructure projects but cannot provide tenors that match PPA's tenor. So we will be there to provide the supplementary tenor to that local institutions that are willing to finance in local currency, which is key, of course, those infrastructure projects. And of course, I mean, with the pandemic and then a lot of disruptions provoked by the Ukraine war, I mean, even if in those more sophisticated markets, those players have experienced many difficulties. We have seen an increase in costs, both operational costs, like insurance premium, but also, of course, construction costs. Liquidity has tightened, and in the context of local currency depreciation, the need for hard currency financing is less attractive. So those are the challenges. I will stop there, but there are many reasons also to be more optimistic.
Indeed, a pretty sobering view. Let me now turn to our private sector representative. How do they deal with this situation? And maybe, Marisa, you first. So as a manager of a bank with extensive coverage of Asia and Africa in particular, how do you see the impact on your market? In the previous fireside chat, Lionel touched upon the degraded situation in terms of creditworthiness of a number of local counterparts, utilities, off-takers, and the like. How do you manage to still sort of provide the kind of financing needed in this rather challenging environment?
Sure, and I, without repeating what my prior colleagues have said, maybe one other lens, and you'd probably expect me to do this, is the sustainability lens. I think one of the big challenges that we've also faced as when we're thinking about macroeconomics is what we call the energy trilemma. So banks like ourselves who've committed to net zero, as have many other financial institutions and corporates, we're trying to drive toward a decarbonized society. Yet in the very moment that we face right now, we have this trilemma, which is really the triangle of the tension between a desire to move towards sustainability and decarbonization, but affordability and access. And so when you put those three things together and you apply them to the developing markets, we have, what I call the triple whammy of how to square the circle. That having been said, where I am optimistic and hopeful is that those countries who are embracing the greener solutions as part of their infrastructure build are going to be those who capital providers will favor. So if you think about my own commitment, every time I make a loan, if I'm making a loan to something that increases my carbon emissions, I'm cutting against my own commitment. If I am lending to something that's green, on the one hand, I'm helping to drive down and move toward my commitment. But also our belief, our strong belief, is those more sustainable solutions are going to be better loans in the long term. They're going to be underpinned by a more healthy and robust economy into which we're lending, because those are the jobs of the future. That is where capital provision is going to head from a cost of capital point of view in terms of the reallocation of global balances and subsidies and so on. So all of those create a positive, virtuous circle. And then let me just maybe give you some hopeful, I always want to end on something a little more positive. And I was so pleased that the minister, and I swear we did not talk about this in advance of the panel, but you brought up two areas where finance is needed, and I'm very happy to give you just two examples. In one country, Angola, 2 years ago, we provided over $1 billion of an infrastructure project to deliver clean and safe water to the people. And then just this summer, same country, Angola, we just provided $1.2 billion of financing for photovoltaic solution, which will get out into the rural communities to give them access that takes them off of reliance on an unstable grid. That's exactly the kind of financing we want to do, that is creating solutions that are both affordable and create that just transition. And I think that leaves us with an opportunity in terms of the energy transition and the general sustainability transition.
Thank you. Marie-Laure, maybe from your side as an infrastructure fund manager, how do you see things?
I think what we've seen for the last 2 days is obviously some put on hold on pure greenfield projects because of inflation rate and depreciation of local currency in most of the sub-Saharan African country. So you have inflation for half of the continent above 10%. And you do have also some, high level of public debt to GDP that has reached, around 60% currently, and the access to capital market that, certain countries try to develop to be able to refinance themselves has just shrank. So on our side, as a result of that, with raw material increasing, issue regarding logistic and the EPC price being just not stable and available for a month or so, even on the renewable energy sector and even on certain emerging markets, the most developed one. I think we have refocused over the past 2 years on more infra-like project and small P-like project that have allowed us basically to close, as I mentioned, we will have closed soon. We will launch our 5th transaction this year, and all in Africa, so especially in the renewable energy sector and distributed energy. We started to look at distributed energy in Asia that was much more developed, and then ended up having some, interaction on African continent with some good example, and I have 2 cases. Candy Solar, which started in India, with developing distributed energy towards small and medium enterprise, and export this model to South Africa. There will be another one that we will announce soon in mini grids that also benefits from subsidies from the World Bank. And that will have a mix between India and Nigeria, so 2 very big countries with access to electricity being, a core issue. So what we've seen in these investments that we have closed into is first more infra-like and B2B business rather than to the public utilities. To basically bridge the gap of electricity needs for industrial and commercial services. Also investment in new sectors. We entered this year in Morocco in the logistics sector, so for FMCG business, which is developing with number 2 in the market to support his development. Is growing very quickly. As well in the health business, that is also requiring private sector, I think, field to allow to develop more access to health, including in the tier 2 cities. So that's what we've seen, and as a result of that is more risk and more reward, because on the Greenfield project, the ARA have not, while an interest rate from the bank and the multilateral development bond, the switch has been immediate. On the ARA, it has not translated into today, and it doesn't translate into the tariff also. So as a result of that, I think we have made a switch from more private sector initiative, and with the idea to rotate ultimately, even if we are a long-term investor, our portfolio to recycle, because that was the only way we get our return. And finally, on the big scale IPPs, we just signed recently our participation to capital increase in Red Rocket in South Africa, which a country which has enormous, I think, needs through RIP project launched by ESCOM, but also private corporate PPA. And we enter into that developer because it was an end-to-end developer with taking development risk to asset management and operation, which makes, the ARA and the return more acceptable to us.
Thank you. I'm turning now to Lionel. So as a Pan-African advisor and financier, how do you see the specific situation of the African markets? From here, we get the feeling that they're suffering not only from the macroeconomic or financial trends that were described by Tom a moment ago, but maybe more specifically by political instability, at least in West Africa. So has that led you to become more selective over the last few years in terms of which countries you can effectively invest in and consider?
First, on your question of stability and the perception of the political risk, please note that in the 5 Francophone countries where you have had in the last 3 years 5 coups d'etat, altogether those countries represent 2 months of the GDP of Nigeria. So in terms of the economic impact, Mali is an immense, great nation. Gabon is full of expectations. In terms of the macroeconomic impact on the African economy, please remember that we speak of 2 months of the GDP of Nigeria, 3 months of the GDP of Egypt, 3 months and a half of the GDP of South Africa. So again, the perceptions as far as Africa is concerned are somewhat emotional. So the pandemics of coup d'etat, to describe very different situations in the 5 countries, is not a pandemic. It's not a pandemic phenomenon, and has a certain impact, but more on perception than on the macroeconomics of the continent. Very difficult to share this vision. So please, the IFC should convince MIGA to make a strong, enthusiastic advocacy for its political insurance of the investment. Okay, you can insure political risks. It is one of the MIGA missions, and MIGA is growing, by the way. You can insure more easily the coup d'etat than the climate change. So the marketing of MIGA for us is very, very important. Second, who believes that because there was a Niger's coup d'etat, the oil, the uranium, and so on of Niger will be closed, we will close the mines and the wells? I mean, it's absurd. It's absurd. So going from, I'm afraid, of a coup d'etat in a country I've never heard of, to go from that to the risk in Africa is immense, perceived by an African, is absolutely unbearable. We would not say that because there is a war in the Middle East or a war in Europe, we would consider that all our rational expectations on the French economy are totally upside down. So please, let's try to be a bit more moderate in terms of emotions, macroeconomic emotions. Right. First answer. Conversely, I think that it's quite important to do and implement what has been said, declared, and promised. We have a few issues. We need guarantee instrument, guarantee tools. We need to leverage public aid development to attract the sort of immense reservoir of private funding. But we need to de-risk Africa. This is said from a summit to another, but we do not see really those guarantee instruments, those first losses instrument. We do not see a fast progress in this respect. This has been committed, but the commitment is not executed as much as the commitment of grants, 100 billion per year for the adaptation in Africa, which is absolutely not implemented. So we need the tools that people describe as de-risking. What we observe is that for the time being, the philanthropes are maybe the most aware and the ones probably leading a bit, driving a bit the thinking on that. With the Bezos Fund, probably with the Mastercard Foundation and so on, we are building together a fund for forestry, again, with carbon immense impact, plus job creation, so on. And who will attract the private sector? The philanthropes, because they have given a guarantee of taking the first losses of the debt bucket. I mean, it's paradoxical that for the time being, they are the leaders in the thinking and in the first pilot. I think it's of the interest of all operators to try and participate in de-risking. In my country, the president has a motto: for every investor, be it domestic or foreign, to say, I buy your risk. If you want to put some equity in an industrial decarbonated project, you are welcome. If you don't want, we will put the equity. And if you want an hybrid model, you will commit your equity and we will give you a put option if after 5 years you consider that it was too risky and it's not the proper yield. Obviously, we cannot do that at a huge scale, but at the scale of a country like Benin, we can probably double the investments by that. But everything which is a lever to leverage is urgent, but it's not implemented as an urgency. I think it's the bottleneck in a sense. And last thing, speaking in front of Marie-Laure of STOA and Françoise in Proparco, there is something which is very important in major infrastructure projects, which is the additionality of associated projects for the communities. And there you have a French experience of that, which I think it's very important, associated to a mining project. And we will have a huge mining growth because of the needs of critical materials for the decarbonation. Associated to every transport infrastructure or energy infrastructure, infrastructures are capital intensive. If we have the possibility with the communities to add projects job creative related to the communities which are in the center of those projects, I think it's important to deliver sort of quick wins and social benefits ahead of the impact delayed in time in infrastructure. This concept of additionality, where I think the French experience is quite convincing, is also, I think, a priority. You have not to consider infrastructure as isolated of the needs and necessary benefits for the community, local communities.
Indeed, thanks, Lionel. And it might be also for private investors a way to solidify their social license to operate or minimize sort of further problems down the road linked with those big-ticket projects. So we heard you about your expectations from MDBs or DFIs, and I gather in the second round, Tom or Françoise will have the opportunity to respond or specify what can be envisioned in this regard to better answer the expectations of investors like you. But let's first complement our tour de table with Boris to provide us with a legal point of view.
Thank you very much. J'adore le français et j'aime la francophonie, et donc j'ai décidé de parler français parce qu'on est à Paris. Je suis sûr que vous aimez aussi beaucoup le français. On parle de cette question de financement des infrastructures par le secteur privé depuis des années, des décennies, et aussi longtemps depuis que j'ai commencé en tout cas. Il faut rappeler qu'on est sans doute dans une situation d'urgence climatique et que donc c'est encore plus critique de financer les infrastructures durables, propres dans les zones émergentes, parce qu'il serait vraiment fâcheux d'avoir dépensé beaucoup d'argent et de temps à essayer de décarboner dans d'autres zones pour finalement ne pas réussir dans celles qui polluent le moins à l'heure actuelle, mais qui pourraient en devenir, avec l'industrie, la démographie, le développement, polluer beaucoup. Il faut donc les aider plus vite, plus fort, et quand on regarde certaines zones comme l'Afrique, il y a peut-être 10 ou 20% des projets d'infrastructure qui arrivent au bout, donc c'est quand même un ratio très faible. Pourquoi ? Parce qu'il y a sans doute beaucoup d'outils qui ont été développés depuis des décennies, mais que ces outils ne sont pas forcément assez rapides, assez efficaces, assez contraignants, et ils ne répondent pas aux ambitions et aux besoins réels. Si on en revient aux moyens de déblocage, certains ont été cités de manière détaillée, bien mieux que moi, bien mieux que je vais le faire d'ailleurs, mais il y a évidemment des éléments de stabilité législative et réglementaire, parce que trop souvent les cadres nationaux dans les infrastructures sont un petit peu vieillissants dans le secteur de l'électricité, de l'eau et dans d'autres secteurs. On a aussi un besoin de droits fiables et unifiés pour avoir des zones critiques, parce que Lionel ZINSOU le rappelait, certains marchés sont assez faibles, mais il faut leur donner la taille critique et donc avoir des intégrations juridiques, mais aussi sectorielles. C'est en cours, mais c'est trop lent. Si on parle même de la directive PPP dans l'UMOA en Afrique de l'Ouest, elle vient de sortir, mais elle n'apporte pas une réelle nouveauté et une charge contraignante. Il y a des choses qui marchent, il y a de plus en plus de projets où les États sont assistés par des assistants techniques, financiers, juridiques, c'est indispensable, et donc ça marche, et ça permet de faire sortir plus de projets. Il y a aussi beaucoup de cellules PPP et des équipes locales qui sont formées, parce que c'est important de former les équipes locales, parce que comprendre les techniques liées à ces projets d'infrastructure, c'est fondamental, on ne le rappellera jamais assez. Mais le nombre de personnes à former est considérable. Le nombre de pays émergents qui ont des besoins de comprendre exactement le fonctionnement de ces projets reste encore colossal. Il y a aussi des améliorations possibles. On a parlé des mécanismes de garantie. Je suis tout à fait d'accord avec ce qui vient d'être dit. Quand on veut les mettre en œuvre, c'est long, c'est fastidieux, surtout quand on doit aussi s'appuyer sur des banques locales pour certains États. Donc c'est quand même un vrai problème. On n'est pas à la vitesse de croisière pour financer. On voit aussi, moi j'ai vu sur beaucoup de projets, des choses assez incroyables, c'est qu'on a des ministères des PPP, des ministères de l'investissement, alors c'est très bien, on se dit que ça affiche une vraie politique volontariste sur l'infrastructure, mais on voit souvent une très grande disjonction dans les équipes locales entre les équipes de certains ministères spécialisés et ces ministères qui eux-mêmes sont spécialisés dans les infrastructures. C'est dommage, il faut trouver un moyen d'y remédier. Il faut aussi accélérer sur les réseaux, parce qu'il y a plein de projets pour produire, mais il n'y a souvent pas de projet pour transporter les utilités. Et il y en a, par exemple, alors le West Africa Power Pool progresse, par exemple, pour l'Afrique, mais c'est trop lent. Il y a aussi peut-être l'implication locale. On a de plus en plus d'États qui, localement, veulent s'impliquer, être au capital des sociétés de projet, utiliser leurs fonds souverains. C'est très bien, mais est-ce qu'on est vraiment en mesure de les associer correctement? Et puis, il y a une chose qui est quand même assez difficile à accepter pour un juriste, mais c'est quand même la réalité. On a beaucoup de projets qui sont le résultat d'offres spontanées, qui ne sont pas soumis à des règles d'appel d'offres, en tout cas pas comme on le voudrait. Pourquoi? Parce qu'on essaye de les valider sur le fondement d'une urgence ou d'un intérêt national, en utilisant les exceptions des règles de passation publique nationale. Mais en fait, peut-être qu'il ne faut pas se voiler la face, en réalité. Tous les projets dans les zones émergentes sont en réalité souvent urgents. Alors pourquoi ne pas développer peut-être des normes exceptionnelles pour des ambitions exceptionnelles en matière d'infrastructure? J'en reparlerai tout à l'heure. Il y a peut-être des voies à explorer pour aller plus vite, pour aller plus fort, pour faire des choses qui permettent justement aussi à tout le monde d'économiser tout ce temps qui est très coûteux en appel d'offres, qui souvent en plus sont infructueux, ou mènent parfois à des procédures qui n'arrivent pas au bout, comme je le disais, puisque le ratio reste faible.
Thank you. So we have less than 20 minutes now to move over to the promising trends, innovative tools, or potential solutions that might allow us to address some of these persisting or new issues linked with financing infrastructure in emerging markets. So we'll try to be synthetic, but let me still use my privilege as a moderator to tell you just a few words about one of those latest initiatives called FAST Infra. FAST stands for Finance to Accelerate Sustainable Transition in Infrastructure, a multi-stakeholder market-led initiative that was launched 3 years ago here in Paris. That's now been sort of gathering momentum and fleshing out, and which basically offers, it's a global system, but we do think it has a potential particular impact, positive impact on emerging markets. That the first dimension is a sustainable infrastructure label, which is now being operationalized, tested on 9 projects right now, and which will hopefully allow investors to go beyond that perception of risk that you mentioned, Lionel, to identify more easily, more straightforwardly, those projects that are the most relevant, that are fully compliant or aligned with sustainable development, climate goals, and so on. So facilitate or fluidify due diligence and channel, at the end of the day, more private investment into infrastructure, both in developed and developing economies. That's an important dimension, and again, we'll communicate about this. Next deadline for us is the COP28, when the first results of the pilot projects will be presented and disseminated to the community. Another important dimension is a collaborative digital open source platform to facilitate exchange and processing of data between the various stakeholders, investors, developers, and so on, procuring authorities, to again streamline, facilitate, speed up transitions to accelerate speed up transactions to accelerate the transition. So if you're interested, fastinfra.org, fastinfragroup.org or fastinfralabel.org, and you'll know all about this. Having said that, I'll now turn back to my fellow panelists, and maybe in the same order, same marching order. So Tom, you've been, in a way, called upon to specify what could be done better or more of from the MDB side. What's your views?
Yeah, I'll try to be quick, but as you all know, I spoke to a couple of people. Most people have been doing deals with IFC currently or over the last couple of years. We've been mobilizing a lot over the last couple of years, but we talk internally about a ratio 1-to-1 for each dollar we put ourselves. We have $1 coming in, not a lot. Or even our flagship mobilization platform, MCPP, for those who are not familiar, it's an investment portfolio approach, diversified, cross-sectional, and geographically. We're about to come up to the 10th anniversary, 16 billion with 17 partners. So yes, success, but not fundamentally changing. So there is this awareness, as I said, the new president, the new World Bank president came in, Ajay Banga has a clear mandate. He's looking to do 1-to-5 or 1-to-10 ratio for each dollar that we originate. Origination will still be one of the bigger challenges to get to those amounts, but set that for aside for a minute. We are looking at more scalable solutions. One of the things we're looking at is a securitization where we would work across MDBs to have a steady supply of underlying loans that can be securitized and bring in the private sector, including the blended finance piece where we would keep the more riskier pieces on our balance sheets and provide that blended finance aspect to it. Not that being said, we talked about the high threshold of investing. The perception that Lionel talked about is still a big problem. IFC has been in business for 60 years, has been profitable all the years, but so perception is still a problem. And one of the initiatives I think long awaited for is a database that the IDBs will be making public hopefully soon. It's called GEMS, Global Emerging Market Database, which has the loss given defaults, default rates and all that of all our investments over the last 50, 60 years. So hopefully that will help with that perception of riskiness in the emerging market space. Thank you.
Indeed, a low-hanging fruit that private lenders and investors have been waiting for a long time. So very good to know it's now finally coming to fruition and hopefully help this sort of combat this cognitive bias or risk perception that is probably hindering a number of investors from trying to invest in emerging markets. Françoise, from your side on Proparco, what sort of new tools and innovative solutions are you thinking of to try and scale up financing from private sector?
Thank you. First of all, in the context that we have already described, it's really important to be patient, patient capital or debt providers. And I think that development finance institutions have demonstrated their ability to be patient, especially during the COVID crisis, where I think we assume a more counter-cyclical role that we used to assume before that crisis. And of course, when things go wrong, we are really striving to find solutions through restructurations that are for the benefit of all parties. So one key thing is to be patient. Second, I think in that challenging environment, providing local currency financing is key, more and more than it used to be. And let us face it, there is still some room for improvement on that point. We've been talking about local currency denominated financing for quite a long time ago. But there is no magic solution to mitigate the Forex risk, the TNC risk. So we are working on some new patterns Especially, we are working with local financial institutions that are willing to finance those projects, and that can manage at a broader level their balance sheet to mitigate that kind of risk. And we are also collaborating with MDBs, for instance, with the Asian Development Bank and the IDB Invest through unfunded guarantee scheme. For instance, in Brazil, IDB Invest has provided a 300 million USD loan to Aguas do Rio, which is an utility, a private utility. To improve the water and sanitation services in the state of Rio de Janeiro. Proparco, this loan mobilized Proparco with a 100 million USD guarantee to IDB Invest. So this is one concrete illustration that to mitigate and to try to make some steps to provide financing in local currency. And of course, equity, and I will let Marie-Laure elaborate on that, is one of the most relevant instruments in that space. Third, I think that DFI have also a preferential access to finance, to concessional finance, and we have to leverage on that. Just to say, of course, this is not open bar, but we have this preferential access, and we have to leverage on that to crowd in private sector. We can do that using several patterns to de-risk those transactions. I think there is also room for improvement in that, because this is a kind of new paradigm for also development finance institutions. And there are also some limits to tackle, especially capital consumption, which is very high for regulated DFIs, and also, I would say, and a financial return expectation that is still there. And sometimes providing first loss guarantee or a junior tranche without the financial return, it's not really easy to explain to our investment committee, etc. So there is still some impediment, but we are making progress in that direction to find ways to crowd in private sector through de-risking patterns.
Thank you, Françoise, for this encouraging message. And now turning to Marisa, maybe you'd like to elaborate on the type of cooperation you engage in with MDBs to try and make the most of the crowding in approach that is supposedly followed now by MDBs, or maybe use frameworks as JETP as well, I believe.
Sure. I'm very happy to cover, and maybe some of this will bring together a lot of threads of the conversation that we've had today. Just contextually, our math says that we will need $80 trillion or euros, pick your currency, of infrastructure finance globally between now and 2040. Of that 80 trillion, 50 trillion will be needed in the emerging markets, 50 trillion. And 75% to 80% of that will come from the private sector. So the critical thing that I think everybody's talking about on this panel is how do we leverage public sector capital to crowd in this vast pool of private sector capital. So where the expression, I think, where it all comes together is the vision of what are dubbed the Just Energy Transition Partnerships. I don't know if the audience is familiar with those, but this was born out of COP26 with the idea that if we could create a mechanism in a systemic way by selecting a handful of middle-income, high-growth economies in the emerging markets, and we could get a pre-commitment of multilateral development bank capital upfront that would be matched by private sector capital upfront, done in partnership with those ministries and those governments to say, how do we systemically look at a holistic decarbonization strategy for your country, which is 100% dependent from its energy source on coal. So you get the multiplier effect, you get the decarbonization strategy, but you're also doing this with a mind that you're not doing this in a way that is going to jeopardize the prosperity and growth and ambitions of these emerging market countries, because at the same time you're looking at the holistic decarbonization strategy, you're creating jobs of the future. That's baked into the analysis. So there are 3 JETP countries, Indonesia, that are in operation today with a 4th coming online: Indonesia, Vietnam, and South Africa. So just to give you the example of Indonesia, it's the US government and Japan are taking the lead on that country. So there are 2 Western government, host governments for each of these JETP countries. And each one has a pool of capital. So in the case of Indonesia, there was 10 billion of committed World Bank and MDB capital, matched with 10 billion private sector capital. What we're doing now is rolling up our sleeves and saying, let's design a carbon-friendly entire system for your country. And in a country like Indonesia, it's not one size fits all. There might be wind in one island, solar in another, hydro in another. We design all these projects up front. As part of that MDB capital, some of this will go to capacity building. Some of it will go to a very thorny subject of early decommissioning of coal, and in the same time retraining all the people who are employed in the coal industry for the jobs of the future. That is a pretty beautiful expression of blended finance, public and private partnership, and doing it away with a country's prosperity in mind. So this is what gives me hope that you can do this at scale.
Thank you, Marisa. Indeed, a very interesting and promising avenue, but one that is probably limited to big emerging markets right now, and of course requires significant amount of concessional money to get started. We just have a limited time for you, Marie-Laure, to tell us about how you see.
Just briefly, what I think we have engaged now. I think we are closing our vintage 2 with AFD and CDC, but we are looking, already the next stage and involve more blended financing in the capital raise that we are contemplating. I think talking about 4 PPPs is the right things, because I think we didn't touch philanthropic, and philanthropic, I think, have huge play to bring into vis-a-vis public and the private sectors. So today in blending financing, we've done it at project level. Let's take the example of our platform with MIA in Burkina Faso, where we did receive grant and concessional loan from Proparco, GCF and AFDB. But that's a project level, and that takes time to materialize on a project level basis. So what we're trying to do is to do it at a platform basis, where you do aggregate several projects with a mixture of grant, technical assistance, and others. And the third layer, I think, will be accreditation. But accreditation takes a long way to do, and there's plenty of people knocking on the door. So we do expect that there will be some funds that are willing to do more delegation to the private sector, with the idea to accelerate the design and the structuring of bankable project, with us taking, at least a piece of risk sharing to demonstrate our willingness to participate to this project, but with and monitor, those funds behind public financing to allow to accelerate. I just want to make one thing is, there is a trade-off that is not easy to manage, is because we're talking a lot about climate blended financing and versus blended financing, and there is also sectors that need to prioritize, which are not always energy, that has access to most of the funding, maybe 2/3, 3/4 of all financing put in place so far. But you have also to support the development of SMEs, low development countries, health and education, because the next crisis is social. So, and we need to tackle those. Otherwise, we'll miss, at least one point. The other point is there's a low level of participation from investors that are domiciled in developing markets. And, we need to change the perception, because when you raise, funding and equity funding, you always go to the same, the DFI, the multilateral agency, and so on and so forth.
Thank you, Marie-Laure. We just have 1 or 2 minutes left. Lionel, in your previous fireside chat, you described the new ecosystem as more efficient, sort of inducing alignment between private and public players. Maybe you could give us an illustration from your point of view from Southbridge, how you work with MDBs to get the best out of those synergies and alignment of interest.
To conclude on a positive note, I think it's the spring of the development banks. What I'm seeing in terms of increase of their shareholding structure, the Banque West Africaine de Développement, the TDB for East Africa, all that in our continent, the BADEA, the Banque Arabe pour le Développement Économique de l'Afrique, are growing seriously, and I think are important partners to work with non-African DFIs. But I would say there is a community of African DFIs. I would include Afreximbank as well, which is very dynamic and better capitalized. If I just should express a sort of dream, it would be that in terms of temporality, what could make even the major institutions around this table to act at a sort of private rhythm? I fully understand that DFIs have their own constraints and compliance needs, but a great progress has been done when several DFIs accepted to share their due diligence of projects. It was a major step, not to be dependent upon the slowest. So that was the first step. But you see, when you are in private equity, you have an investment committee or a credit committee at midnight tomorrow because the deadline is at midnight tomorrow. And you will have the decision. When you discuss with international development institutions, you have the next credit committee next quarter. It cannot be the rhythm. So to privatize the mines, if you want the blended finance to be blended with the private sector, just to privatize behavior, step by step. I think it would be a great progress for Africa, and then we would have a chance to see the governments privatizing their own rhythm, which will be longer. But it's important because we are under urgency.
Thanks, Lionel. I'm sure this has been the message has been received fully loud and clear by the DFI and MDBs here. The need maybe for a more coordinated approach, a bit along the lines of syndicated loans, as commercial banks usually do. Boris, you have the word for the end.
Thank you.
Put the final
I'll try
touch.
to be quick. Juste, je pense que à grands enjeux, grands moyens, peut-être il y a cette urgence sociale, effectivement aussi économique, climatique. Et peut-être que sur les infrastructures, on pourrait raisonner comme ça a été fait dans d'autres secteurs. Et peut-être que certains pays pourraient s'unir pour avoir la taille critique. Peut-être qu'on pourrait proposer de nouvelles normes juridiques qui seraient des traités spécifiques à plusieurs pays par type secteur d'infrastructure. Alors ça paraît un peu utopique comme ça, mais ça s'est déjà fait pour beaucoup d'intégrations et beaucoup de systèmes qui fonctionnent très bien dans beaucoup de zones du monde. L'avantage de ces traités, c'est peut-être qu'ils pourraient permettre de standardiser réellement les procédures de passation dont je parlais tout à l'heure, de planifier les projets, de rassurer les investisseurs, prêteurs et la communauté. Et puis peut-être que justement, avec des procédures de passation rapides, on aurait ces procédures de validation, peut-être des projets plus simples, parce qu'ils seraient planifiés et validés comme d'intérêt stratégique sur le continent ou sur une région. Ça minimiserait les coûts, ça nécessite de s'unir, ça nécessite évidemment des moyens, mais encore une fois, ça a déjà été fait dans d'autres secteurs pour harmoniser et pour avoir des États à taille critique. C'est juste une voie pour accélérer l'intégration juridique, économique, et puis peut-être pour mener à terme une politique de financement d'infrastructures qui soit peut-être plus rapide et bien identifiée par toutes les parties prenantes avec des contreparties fortes. Et c'est un grand chantier qui commande sans doute de savoir si l'on veut se donner les moyens de nos ambitions pour ces zones émergentes, mais aussi, comme je le disais au tout début, pour la planète. Voilà, merci, j'ai essayé d'être bref.
Thank you, Boris. A lot of food for thought. We've gone over our allocated time slot, but I think it speaks to the wealth and scope and interest of the theme we were tasked to address today. So please join me in giving a round of applause to our panelists.
J'imagine que